I came late for the briefing, and when I came, all three of them said, Karam, we've aligned with each other. And that's not good for you if they've aligned. I don't know what they've conspired. It means it's going to be boring for you. And I've also heard a complaint that none of the panels open up for questions. So you can ask questions right away. If you have something, and they say something you disagree with, put up your hand and shout out your point of view, right? If they have mics for you, you can go get them. Because otherwise, we don't want this to be a lean-back session where you're just listening, okay? Please participate. With that, we're going to get started. So I told them that I just want to hear about their pain points, right? I actually only have one question. I'm not a FinTech expert. I don't even use digital wallets yet. So how many of you use digital wallets? Okay, I would have expected everyone. So I haven't. So and all three of you are using digital wallets?
Yeah.
All right, Hann, start first with, what are the pain points that your company sees? Oh, by the way, if you've noticed the profile of them, David is the odd one out because David isn't really, in the FinTech space per se, right? So we don't know how he managed to squeeze himself or pay his way onto the panel here, but give him the hardest time, okay? So with that, Hann, sorry, go ahead.
No worries. Just, I guess, quick introduction for people who don't know Jirnexu. Hi, I'm Hann. Jirnexu, we're a Southeast Asian full-stack FinTech startup. And in Malaysia, we operate as ringgitplus.com, right? What is ringgitplus.com? We are a financial comparison and aggregation website for Malaysians to come, compare, apply, and get approved for financial products online.
So just a quick one. I was on their website earlier and I was looking for a 10,000 ringgit personal loan, 3-year tenor. And unfortunately, it's only available for non-entrepreneurs. It says salaried staff. So if you want to put self-employed, there's no option for you to get a loan from the banks on their panel. And then out pop like 17 companies, right? Financial institutions, great. So many I qualify for. But Citibank was right on top, number one, although theirs was not the cheapest. So how is that happen? Is that because they're an advertiser, they're a sponsor of yours that you put it up there?
Yeah, no, it depends on what you look for, right? So, on Ringgit Plus, you can choose whatever filter you like, right? If you say, hey, show me banks with special offers, the banks that we work with the special offer will be shown. You say, hey, show me banks with low interest will be shown.
But this was not special offer. I mean, they were not the cheapest. They were just number one. Yeah. So I'm wondering whether they've paid their advertiser, which is fine because that's your business model also. Yeah. Basically, if you pay, then you can pay per view or whatever you call it, right? Okay. Pay per placement. So it is lah. Okay, fine. Let's just get it out there because everyone also knows you're just at least being honest and saying it.
Yeah, so, and ultimately you've got to make. So here's the truth about.
Hey, folks, don't laugh like they got to make money, right? There's nothing wrong with that. No. At least he's being honest with you without me prodding, right? So okay.
No, here's the truth about aggregation and comparison, and especially in financial services, right? The key is to make sure you have the widest selection that you can. So it doesn't matter which banks pay you. All of them should be able to pay you, such that you can offer all of them to consumers, and that's what we need to do, right? Then the question goes, hey, who do you show up on top? What do you do, that kind of thing? The answer is in doing what's right for the consumer. And what I mean by that is, if you don't show a product which is right for the consumer, they're not going to choose it anyway, and you're not going to make money anyway. So if you stick close to the consumer, right, you're going to make your money, right? And that's ultimately where we believe that fintechs are winning. Why fintechs are winning is because they are sticking very, very close to consumers, where banks are not. So that's
I mean, you always hear that, right? Banks are not sticking to consumers. How many of you have left your banking relationships and have moved to a fintech to do all your financial, needs or whatever? How many of you have left a bank? Have left your bank? I'm looking. Wow, so many hands. Oh no, sorry, there are no hands. Nobody. So as bad. So this is something I still don't understand. As bad as banks are doing, and everyone says that, right? You hear about it all the time. I haven't met a single person yet who has left their bank. So. Maybe next year somebody will be the first one to say that, David?
But, that's where we are completely wrong, and we've been discussing that earlier.
Behind my back, by the way, they've been discussing it.
Discussing, Hong Kong, and this is how it looks like, how developed it is, and Singapore, this is, how you identify yourself with the government kind of driven
the
card.
Requirements per market, okay.
Yeah. But then you have Indonesia, where most people don't have a bank account, and they will not start with a traditional bank. And that's where our business models will get actually disrupted. We are the copycats of what we saw in the developed world. We develop it, we get traffic from Google, we display beautifully the comparison, and we drive the traffic to the traditional players. But then suddenly, it's Grab giving credit to their users, or starting with their drivers, or it's AirAsia giving credit to somebody for travel, or it's an e-wallet platform. And the question for us would be eventually how to get closer to those guys and less about the traditional banks eventually.
Yeah, the business models are just structured differently. So Prashant, the floor is just what are your pain points? And David, after that, you just jump in with your particular pain points in your business, right?
Sure, thank you, Karamjit. So a bit of introduction.
You may not thank me at the end of the session, so don't thank me.
Yeah, just be nice, huh? You were much nicer outside.
It was.
Hey, don't waste time, the clock is ticking away.
So CompareAsiaGroup, just like Jirnexu, we are a comparison aggregator, but we are present in 6 markets across Asia, over 100 million visitors, and our brand in Malaysia is known as Compare Hero. And for those of you who don't compare, please compare whether it's on their site or our site, because it's the right thing to do. So I wanna just quickly touch on what David said and then move on to my pain point, because I do want to discuss that. So on that note, Karamjit, the question whether you've ditched your bank is probably not a correct question.
Oh, really? Oh.
Right? Because I don't think that's going to happen. Like, banks are not going away. But what is happening is that their services are getting unbundled. Right? So parts of their businesses are going away. Because what is happening in the world today is there are companies such as ourselves, there are lots of entrepreneurs here, and these companies are becoming specialists in a particular aspect of banking. Not necessarily all. So you call them robo-advisory, you call them e-wallets, you call them loans, even payment products, like micro loans, SME loans. So disruption is happening in the form of unbundling what was a forte of a few big players. And they used to do everything, right? And that's where disruption is coming at. Now, it is up to the banks as to how fast they move and how they can rebundle, but I can, my personal opinion, rebundling cannot happen internally. They have to partner with people in this room. They have to partner with those who have gotten closer to the customers. So that's my view on the banking industry. In terms of pain point, I want to raise a pain point which is I don't believe it's my own pain point. I think it's a pain point for everybody in this, not only in this room, but in our region. And the number one thing that keeps me awake as we get more than 100 million visitors on our site is info security. Now, the 2 days that we've been here, we talk a lot about growth. We talk a lot about becoming unicorns. We talk a lot about the untapped markets. What we are not talking about is that Asia is the worst region in terms of per capita spend on InfoSec. Now, North American companies spend 0.22, or North America spends 0.22% of their GDP on InfoSec. Any guesses how much Malaysia spends? Right? 0.08.
0.08.
0.08%. Asia as a whole only spends 0.06%. Asian companies take 70% longer time to identify a cyber attack. And we all saw Patrick's presentation yesterday, which was very inspiring, and we're talking about lots of unicorns, many of them sitting in this room, many of them upcoming unicorns sitting in this room. But there is a report, the A.T. Kearney report, which says that Asia could potentially, in the next 5 years, lose $750 billion of capitalization because of cyber attacks. So collectively, I think my message, the only message if I can give to this room is collectively, we all need to do better. Because if one goes down, right, it's not good for the industry. It's bad for all of us. This is one thing in which we are not competitors. This is one thing we are all in this together. We really need to up our game in spending on cybersecurity, on learning the best practices, and making sure that we can eliminate these threats, because our region is the biggest threat right now, especially ASEAN region.
Yeah, I don't really see that pain point that businesses are feeling now. I mean, it's part of the budget, but I'm sure if I ask anyone here, have you tried successfully to get a bigger budget for securing your company, your database, your clients? They'll probably say no, because the focus is on growth, right? It's all about growth, and this is a piecemeal, like whack-a-mole. Right? If a problem comes, and the global situation has shown that when people get attacks on cyber, the Sony PlayStation breach or whatnot, they don't leave that brand, right? So everybody realizes your customers will give you a chance. They almost expect it's going to happen because there are bad hats out there. So it's interesting you bring it up, but I don't see anything being a game changer in that space. But David, let's just get to his pain points also, because you're a different. And I also went to his website and I scrolled for air humidifiers, right? So, and I saw suddenly you just scrolling, okay, somebody's laughing there, you've done the same, is it? Okay, no wonder I couldn't get in at that point. So they scroll, and then suddenly I see a sharp advertisement there, but it's not clearly displayed as a sharp ad, right? It's just a nice visual of sharp, and then suddenly you see a row with three sharp products, then you go down, you see a disproportionate amount of sharp products as air humidifiers that are price competitive. So is that also because an advertiser is coming and paid y'all, and y'all are giving them higher visibility on your site? And that's just par for the course for this ecosystem, right? I'm not highlighting you. I'm sure everybody's doing this.
It is. I mean, and at the end of the day, we do, are pressured by producing revenues, showing that to our investors. And on one hand, you can argue there's this ideal world where we go the Google way, so the organic result will be really organic, not non-biased in a sense. Whatever we believe is the right answer, we will provide it, and we will run that for next 10 years, and only then we will start thinking about how to monetize and maybe add the advertisement layer. In our business, we did the math, and it doesn't work like that. So because the paid part would not be sufficient to justify the costs which are necessary for the business. So our decision-making process was either we still keep that monetization element in the sorting algorithm, or we are out of the business. And we're trying to make it out, and obviously over time we are more and more transparent what's being prioritized based on payment versus what's being really good for the user. And actually very often it goes hand in hand, luckily. But yes, it is like that. Yeah.
I think on the one hand, it feels deceiving because it doesn't say that's an ad, right? But of course, people like in this room, we are savvy, you recognize that's a paid ad. But maybe for some of the other users, they don't see that, and whether influencers or not. But then I understand it's a bottom line, it's a survival case for you all, so you got to do it. Whether you guys think it's ethical or not, it's out there, right? It's happening. It's not going to change. So, that's just the reality. But yep. Pain points, I know we kind of drifted off a bit, but any other specific pain points that you guys have in your organization?
Yeah, absolutely, right? So
I'm still at the first question now, because the audience hasn't asked any questions yet, so I'm really milking this first question. Yeah. Please put up your hands and ask questions.
Okay. Yeah, and it's entirely, I mean, my pain points, the pain points of Jirnexu and Ring Plus is entirely related to what you're saying earlier, so it's not necessarily discussing over, which is how do we get every single provider on the platform to provide then the products there that we don't have to show the ones that are the only ones who are paying us, because all of them are paying us, right? So it doesn't matter. Right, and the biggest
right now,
pain
not
point,
all of them are paying you, right? And that shouldn't matter, right?
No, we've got 80% of the banks on the platform already,
as a paid
right?
customers,
right. So
okay.
Yeah, so for me, that allows me to go, hey, look, we're giving enough choice to the consumer to say, hey, we've got a good service here, and we can do right by you. But the pain point
stop there first. So I understand. What about the 20% are not paying you?
Correct.
If they do have a product that may be the most competitive, you're still not going to feature them, right?
It's not about the product, Karamjit. It's about whether they can actually offer the product online. And that's the pain point, which is they might have the product, but as a consumer, are you going to drive 20 minutes to a branch to get the product? No, right? So that's the biggest pain point, which is banks need to wake up. Right.
So are you saying there's still banks that don't offer their product portfolio is not online yet fully in this day and age?
In 2019, there are banks in the region, not just Malaysia, who do not offer access. Information is one thing, access to their products online. So
that's a real shocker for me.
I completely second that. I mean, we see it in 6 markets. Yeah. There is not a single market where 100% banks offer all the products digitally. And it is shocking especially when you see them, investing in a lot of other digital products, and you say there's basics that they don't have right. And I'll just add to Hann's point, because we are in the similar industry, that it is such a big challenge for us, because it's not only about whether they can offer a product or not. The second thing is how do they handle once the customer reaches their website? Right? That is another critical part. What are the internal processes? Because we are dependent on them, right? On them fulfilling. Now, customer has already given a very high intention of buying a product, right? But if the customer doesn't get a call, or they don't have a user journey which is easy for a customer to fulfill, right? We lose the customer. Right? So who ultimately pays for it? We do, because we already paid for the customer to come on the site. Right? We already paid for the customer to get to the bank, but if the bank cannot convert it, right, then we become the ultimate loser. The customer becomes the ultimate loser. So absolutely, I mean, we have to differentiate between banks given their capabilities, and that is probably one of the biggest challenges we have in conversions.
Interesting. I think we're all caught up, whether we realize in a sense of warped reality, right? Because we read so much in this space. You assume that's a real shocker for me to hear that only 80% of banks, have their products online. You think by now, halfway through 2019, right, we're coming up to the next decade, they would all be online. And I hear you about them. Even if you have a product online, you're not able to then convert that interest, right, which is quite shocking also. But then would the answer be that digital banks who come up pure digital? Singapore has already come up with their guidelines, right? You're going to see some banks too. And I was told in Malaysia, by the end of this year, they'll have those guidelines. People are looking forward to that. Will that be the game changer where the brick and mortar banks take it very seriously then? And does that's advantageous to you, because then you're helping in the conversion, right? And then you make more from that. Right now, you're not.
But I think, that would be the point.
I'm trying to look for questions also from the audience. Sorry. Go ahead.
Because I think, that would be the point where our business model gets really disrupted, right? Because, talking to the traditional players, and you guys, banks for us, the traditional e-commerce guys, it's kind of straightforward, and we have our agenda, we're pushing what we need in order to provide a good comparison service, good value, transparency value to the users on our website. But what is happening is that those markets are getting fragmented, so there will be not 5 traditional banks, but there will be dozens of companies, specialists in certain niche banking products, and the users are not coming to Google and our platform. The users are spending time on their e-wallets, they're spending time on the Grab app. Everybody wants to capture that audience within their super app. So the question is, we can provide that transparency value. We have the competence to that. But our question, I believe, very soon become, how do we bring that competence into those audiences of the other apps? And it could be that our own website, as we kind of present ourselves, this is our company, this is our website, may not be relevant anymore. There may be a lot of pipes which we are the plumbers. Yep. But at the end of the day, both the players, we will be the connectors essentially.
Yeah, great. Right now you guys are there. So because we've only got 1 minute for 5 seconds left, if you have a question, shoot it up. So what I understand is that, not so much for you, David. I think yours is straightforward, because when people are interested, they click. Chances are they're gonna buy anyway.
It's not straightforward. It's not straightforward because it's not straightforward because we are dependent on getting users from Google. But then users are not coming to Google, so we need to find a way how to be in those Grabs, e-wallets. Yep. Name it.
Okay, so you've still got a ways to go. But for these two, at least, because for you to earn higher revenue, you need that conversion to happen. You've already, like me, right? I could have choose Citibank or someone. You need me then to click and make the purchase, and they will know it comes from you. Yep. So you get a small take of that, right? When the sale is done. So that's kind of interesting that your path to profitability is affected by the processes within the brick and mortar guys. And hopefully you've raised enough funding, you can survive till that happens, or the digital banks will be the game changer. Because I spoke to somebody from HSBC last year, and he said that, look, everyone says, we banks are traditional, we're old, and we're not with it. But HSBC had a 4-point-something billion pound IT budget for last year. Can you imagine how much that is? 4.5 billion pounds, that's like 20 billion ringgit, right? IT budget, man. So he said, do you really think we're going to go away as banks? So I couldn't answer him, but there's huge disconnect there, right? We're all saying they're going to be swept away by the wave of digital, but they're still there, and they're spending a lot too, and they've got competitors. They've got smart people working for them. I think you came from that, right, industry? You were there before. So would you go back, knowing what you've seen over here now, would you go back to a brick and mortar bank? Prashant?
Anybody hiring?
There you go, man.
No. I think I'm done with that. It's a conscious decision. I'm very
but the
pleased.
upside here is way longer. I think it's much further away than you think, right? So you guys got to just stay the course till it happens. Okay, I'm very disappointed in you. I told you they were conspiring. No questions from the audience. I think there's alcohol outside, right? Unless you didn't know about this. I don't know if the MC needs to do something to end the conference now. I wasn't paid to do that, right?
Yeah, we're going to announce the winners from the
Okay,
startup
that's
arena.
right.
Yeah.
Please give a round of applause to the three panelists, right?
Thank you. Hey.